How we doing, Danny? Morning, Evil. How we doing? Morning, Barry. So this morning, you have to excuse my massive spot. I don't know if you can see it, but I've got a huge spot on the end of my nose. You can't see it, can you? That's good. It's a good thing. I don't know where it's come from, but it's massive. You know, every now and again, you get one that actually turns you into a rhino. It's one of them. Morning, Leon. Morning, Mark. Don't know where it comes from, but anyway. Right, let's have a crack on with the news. So we've already had news this morning, quite a lot of news this morning. So basically what we're going to do today is we're just going to do the normal analysis, have a look at the opening ranges, etc. And then we're going to look at the 30-minute ORB. So I'm going to do some individual testing on the opening range breakout strategy, but using just the 30-minute range, because I want to determine whether or not it's worth taking on each of the indices, because I've been trading it and it's kind of a fallback breakout, and I just want to see actually how effective it is, because I haven't even tested it. I just decided to go ahead and start live testing it, but I haven't actually done any back testing. So I just want to see whether or not it's actually worth taking, because it only really gets taken if you don't get a 5, 10 or a 15 ORB. Then it will take a 30. So I just want to check whether or not it's worth actually doing. Obviously a good thing to do before we start trading it. So today we've got the inflation expectations for New Zealand came out virtually on target. As you can see from the ADR dashboard today, there's not a lot of movement in Asia. Pound odd has hit because that's the pound has basically had some good news this morning. But the New Zealand dollar here, you can see very range bound at the moment, not an awful lot of movement. We've got some downward movement going at the moment on that, but I think it's probably Swiss franc. Yeah, so this is a bullish movement on the Swiss franc causing that. So as you can see, New Zealand dollar not really affected overnight by that news, as you would expect. It's forecast, so wouldn't do anything. GDP for the pound came out up, and not just up, substantially up. Up 0.3 on the monthly forecast, which is actually, you know, fairly decent deviation. So we got some good movement on that one this morning. Preliminary quarterly is also up. So this is the estimate of the quarterly number, which comes out in March. Excuse me, which is based on January and now the revised February figure. So again, we should be looking at a decent GDP increase for the quarter. So this is all bullish for the pound. Swiss CPI came out on target. I was expecting this one to have a little bit of a drop today after the move we had on the Swiss franc yesterday, but it hasn't. So that undoing of the Swissy we had yesterday, they're doing it back. So V-shaped recovery and A-shaped recoveries on Swiss franc pairs today. So yeah, US dollar this afternoon. We've got unemployment claims and PPI coming out this afternoon. They are all forecast to be better than previous, which again is indicative of not being able to drop interest rates. So we'll see what happens. I'm just worried I've popped it. Sorry, you don't want to know about this early in the morning. Hope you're not having your breakfast. Anyway. 1:30 this afternoon, we've got US news, so be aware of that. This comes out an hour before the open as well, so if we have got a very big move off of PPI, just be aware the opening ranges will be a little bit weird today. So that's the news which is forecast and already happened today. The traders trim the Bank of England bets after GDP. So, I mean, you can't really tell from GDP, but the Swiss CPI there, as forecast, we've had a big move on that, but we had a big move down on the Swiss franc yesterday in preparation for CPI, and now they're just basically undoing it. So they came out the market yesterday thinking we might not get a good number, well, let's scale out of some Swiss. Then they got a decent number, and now they're putting it all back in again. So just V-shaped recovery move going on there. That's pretty much it. That's all the pound news. Overnight wise, just more tariff talk basically there from the Bank of England basically, but other than that there wasn't really an awful lot overnight. we've got some more, again, tariff talks from Trump overnight. This is what it's all about at the moment. Until we've got all these tariffs in place or not in place or agreements done, which I have no idea how long it's all going to take with each country. But until this is done, we're going to get all this weird volatility, which is going to just carry on going. So it's just going to be a volatile month or two at the moment. There's nothing we can do about it. He reckons he's brokering a peace deal with Russia and Ukraine. The way he's going at the moment, it's probably a back scratching exercise, I imagine, but we'll see. So yeah, that's about it, really. Not an awful lot else. So nothing particularly exciting has happened overnight. Let's look at the breakouts today. Not a good day yesterday on the ORBs. Couldn't make any money at all on the ORBs yesterday. They're all over the place. We did get some decent movement. The prop firm account I did all right on in the afternoon. Matt came out with about 500 or so. But yeah, a bit of a weird day yesterday. So yesterday, got a hedge on the DAX again today. Market's just really odd. Oh, no trade on the FTSE, and that's a clean break. Typical. So the DAX yesterday had a failed hedge exit. So the move yesterday, obviously this was the hedge we had yesterday. We did get to target yesterday, which was here. So I took off the longs, or the EA took off the longs, and then we triggered a short, and then it flew, and it stayed up here. So basically it was a double loss. Actually, it was more than a double loss yesterday. I think it was a $900 loss on £900 loss on the DAX or something. Can't remember actually. Obviously, the FTSE yesterday we didn't have a trade on. So, yeah, not a good day yesterday. And we are opening with a hedge today. So, downside target for hedge today. This is a tricky one on the DAX. Obviously, we got the gap. So, this is where we closed yesterday. We've opened up here. So, we've got this gap fill in place. So, this is the logical move today down to 3R. It's a little bit early to be getting out, but we will see. So I'll watch when we get down to there. But at the moment, I'm leaving at 5R. 5R's ADR today, and it's not really even a good level either. It's a very tricky day today because of this massive move that we had off the back of the news yesterday. That's the logical area of support to the downside, which is about 135 ADR. It's really tricky today. We'll see how far the DAX goes and how aggressive it goes, but expect a bounce out of here. But whether the bounce is big enough, don't know. I'll come back to that. It's going to get there really quick by the looks of things. It's tempting to put the target here to the downside and then try and get out with a very quick move just to get a sort of a break-even-ish sort of session off of it. But I'm running the risk then of having to re-hedge it if it's going to collapse. I'll come back to that in a minute and we'll have a look at it. So the other account, basically, we've got a clean break to the downside on the FTSE and a clean break to the downside on DAX. So if we do get that collapse down today, this is going to get back all that loss from yesterday and probably all the loss from the day before and the day before that as well. So this is what this is all about. This ORB stop loss based strategy. It's all about getting these big, fast, clean breaks. This is where it puts in these like big days. And the rest of the days, you're just going to take tiny little losses because you're just using these tiny little 10% of ADR stops, which means that any kind of volatility and whipsawing at the open, you're just going to lose every day. Every day you get a clean break, it's a big one. It's you know, breakout strategies are all about low strike rate, high reward, same as trend strategies, low strike rate, high reward. So it's just about trying to get these breaks so that you don't come back and get those stops triggered before you get to where you want to go. Today, we're on our way to both. So we'll come back to those in a minute as well. So ADRs, not a lot. We got the Pound Odd, which is obviously moved on the back of the pound news. I've got buys on that, which is nice. apart from that, there's nothing else on the ADRs. RSI dashboard, we've actually got some movement. It's brilliant. Evil, from financial reduced Swiss core CPI actual 0.9 on a forecast of 0.6. 0.1 is the monthly forecast. That's the yearly. These are yearlies, not monthly. So yeah, I mean, the yearly is an important figure, but with the Swiss, specifically with the Swiss, because they're so volatile with the way that they change their rates and don't tell anybody, we're interested in with interest rates, not so much interest rates, but with CPI, PPI, all of the major metrics, GDP, etc., etc. The annual figures are made up of monthly and quarterly figures. Yeah, so this is kind of your 200 moving average. Your quarterly is like your 50. Yeah, your monthly is like your 20. What we're interested in is short term. How's this affecting short term currency movement? Which is what we're interested in, which is your monthly figure. Yeah. We were expecting it to be a 0.1 negative. We got a 0.1 negative. We knew this was going to be bigger than forecast because the previous monthlies and quarterlies were bigger than forecast. Therefore, this is going to be bigger than forecast. This is a known factor. So this is why this is the most important one, the monthly. So if you go and look at this, this is why the monthly is here. Where are we? Then the yearly isn't. So if you look at the yearly, it'll be an orange or a yellow. Where are we? It's not even on there. Because we know we kind of roughly know what it's going to be, the annual, because we've had the data already, so it's a known factor. This is why news is it does affect things, obviously, because it is bigger than forecast. So it is bullish because it means that there's a chance that interest rates will have to change, but in the short term it's going where it should be going. It hasn't been, but you know, that's basically how you kind of read it. But if you look at the yearly CPI year on year actual rather than the core is all your stuff like energy, food, the real important stuff. The full figure is basically not any different to what we were expecting. It's very complicated, CPI, because there's so many different metrics that affect it, and the metrics that affect it are different depending on what's going on in the world. If we've got an energy crisis going on, core CPI is actually very, very, very important because a lot of the core CPI is made up of energy costs. However, if we haven't got an energy crisis, which at the moment we haven't because we've all stabilized after having the energy crisis, it's actually less important. It's more important to how is everything else going at the moment. And that will change if a new war kicks off or if an oil depot explodes and we've got low oil production. You know, there's all sorts of stuff that affects it. It's very complicated, which is why as normal humans, rather than in economists who are trained and paid 6 figures a year to understand all this stuff in detail, we just follow that. So much easier. And at the end of the day, it's usually right, isn't it? If it's red, it drops. If it's green, it pops. Try putting some toothpaste on your big nose spot. That's an old wives' tale, that. It will go. I've got 2 teenagers, luckily, so we've got plenty of spot cream in the house. Morning, FTNet. Morning, Chris. Right. So, yeah, where were we? ADRs, we've done. RSIs, there's a few opportunities. Euro odd on the hourly is extended to the upside. So there's a good short opportunity potentially there today. there's a good chance I'll get that one on today as well. So may well be getting a new trade entered on that one. There is already a new trade entered. Euro yen is extended. Euro New Zealand is the one that I've got into. So Euro New Zealand, we were extended yesterday, and there was a signal yesterday short, so I am in short already on the Euro New Zealand. Pound odd also extended. That was already extended yesterday as well. No, not quite actually, but now it is. So there is a good chance of a short order coming in on the pound odd as well, and the rest of them are all yens. So 4-hour Euro Swiss, that's gone now. So that Euro Swiss, that was a lovely level as well. There's the gap fill, look. Bang, off we go. But that's because of the news. So, but then again, this was because of the expectation of the news, and this is the reality of the news. So this is going to just recover. So you can still get in that short if you want to try and find an opportunity down on a low time frame to jump in on a well, you're not going to get a retest. It's bloody miles away. Yeah, some kind of pullback on it. I mean, look for a 30, 50 or 61.8 pullback or something to try and get in short on it if you wanted to. But anyway, right, so those are those. Over to the RSI account. So banked, I haven't posted this. I will post this. So banked, whatever that was, Euro New Zealand. Bank Euro New Zealand this morning. It's not in order. Oh, I'm on it. No, I didn't bank Euro New Zealand, you idiot. I banked pound odd. So pound odd. This is why I want this part of the dashboard. Just going off tangent a minute. This is why I want on the dashboard what's just closed. So that I don't have to keep mucking about and going, I just want to see, what have I shut? Why is this green? What is this green that I've just made? That's what I want. I want that. So that's what I'm going to build next into this. Because it's really annoying having to flick around. Pound odd is what we've just shut, which is there. So this was your RSI extension. That was from whenever that was from. Second entry out. So nice bank 0.5%. We're in Euro New Zealand now. So we've got potential for Euro odd as well today to trigger as a short because that is extended. So we should be able to get in on that today. Just want an hour of selling off and that will be another short. So Euro New Zealand and Euro odd will be in. Apart from that, nothing else. We'll quickly cover the zones. The trend pullback strategy, which is in forward testing at the moment, that one sitting in 1900 in profit. I don't think I've got the dash. Did I put the dash on this? Can't. Did, yeah. Let me just open up another chart. Grid, none. Line graph, none. Foreground, none. White. Can't remember how much I put in this. 25. Oh yeah, and I also withdrew out of it, didn't I? That's going to skew all the figures. Oh no, and I redeposited into it, didn't I? Yeah. Let me just readjust that just so I can get a proper view of actually what the figures are that it's done. There we go. So it's up 13%. With 7% running. So yeah, it's pretty decent at the moment. the trend pullback strategy. I'm still not convinced about the yen trending from now on, but at the moment it seems to be working. There's a lovely trend on at the moment with that all locked in as profit. We've got a buy on there because that's on a pullback. We've got another buy gone in there as well. That one's locked in at profit already. So we've got 2 that are guaranteed to bank today, and 2 new positions on. So I'm still dubious about this, because the whole testing on this entire strategy that we developed was done on COVID and pre-COVID with no interest rates on the yen. We've got a completely different trading environment now with the yen, because we're now using interest rates to control inflation with the yen. So I have no idea if that yen swap rate is going to cause carry trades, which cause the trend. So I'm running it, and I'm loath to put it out live at the minute, because I'm not sure if it's actually going to work as a strategy. But anyway, we'll come back to that after a month or 2 of knowing what's going on. Obviously now we've got Trump involved, it's impossible to tell what is what these days, isn't it? So yesterday banked 0.88% on the Zone Trader account. Got some to bank today as well, potentially. So we're going to go through the zones, look at everything, look at where we are, and then I'll obviously go on to the stuff we're going to cover with the ORB this morning. So starting at the top, Aussie CAD, long on Aussie CAD, need a new buy. This is a tricky one for a buy zone. So I'm going to pick these lows here. Somewhere around this area here, we had quite a lot of price action. So that's a fairly decent area to look at. We've got this high here, a couple of extra highs here, that low. So there's a zone roughly there, which we've already reacted at twice. So this area here is kind of already been rebought. So if that is where they're buying from, we should be going up. If we're not going to go up, then this is where we're going to come and retest somewhere around that area. So that's the second entry. Exit, I'm just going to leave up there. We're forming a range at the moment. So there is an argument for taking a range high exit on this, which is going to make me about 0.5%. So there is that option, and I'll obviously monitor. We've got no news really that's going to move this today, so I'll just leave it as it is for the minute. Aussie dollar Swiss. So I'm looking to get in for some Swiss longs. Some Aussie Swiss longs. So longing against the Swiss franc. So today looks like the day we might actually get an entry. So that's coming down. Still waiting for that. Aussie New Zealand, got shorts on. We didn't go anywhere yesterday, so exactly the same case as yesterday. Looking for next entry up there. Exit down at the support. Aussie dollar US dollar, got buys on. We've gone nowhere all week. Still in profit, just waiting for it to do something. It's got to make its mind up. The US has got to make its mind up. CAD Swiss, again, looking for an entry. Obvious highs. Broke it, retested. Looking for that for the buys. Euro odd. Okay, so next entry short on this one. Got one short on. Very, very, very tricky to try and find somewhere in here to get resistance at, because there's 1,000 peaks and 1,000 troughs, and any single one of those could be reactive. Before that, it's a whole area of balance. So this entire area that is impossible to pick a buy and sell out of, which is why you've got nothing really much in here. So I've just picked these old range highs, which we've retested, as being a potential area of support resistance. So that's literally where I'm going to put my second short on. If we can get there without any kind of mucking about with accumulation and just basically try and trend straight up into that area, this entire leg here is your elastic band, your stretch, your extension, in the same way as that was. And obviously we're undoing that now. So all the sellers now are taking profit on their shorts. All the buyers that are entering here are also going to take profit when they get there as well. Yeah, everything moves in 50%, 30%, 60% retracement. So that's basically where I'm looking. That is your 61.8 retracement on that leg. 61.8, 71.9. So I'll be shorting that. as a second entry. Euro CAD got shorts on at these highs. So the bottom of this propulsion gap is the next short in here. Got a load of dash alerts going off. They're probably pound. No, they're Swiss franc. US dollar Swiss and Euro Swiss ADRs. So Swiss franc on the move. There we go. There's Euro Swiss. And US Swiss. So huge move on the Swiss franc this morning. Underway. There's Euro Swiss coming down. So I'm looking for entries on this. I was looking for entries down there. As we've already hit ADR, if we can get down here today, I will have a crack at that. Euro pound sells on at the moment. Next sell up there. Exit at the lows. Nothing's really moved. Euro New Zealand. Next entry short. Just about to trigger. So got two on this. Third one going in somewhere up here. We're going to find some resistance because we have previously. How strong that resistance will be, I don't know. But I'm going to get in with my third position there. Get the average up. And then target will move to here. Might as well move the target now. So this little wick here reacted off of those highs. That's the previous high that we broke. So somewhere around that area, just move the triangle up actually. Triangle? Square. Somewhere around that area basically is where I would expect to find some price action. Yeah, so this is an area we were selling at. We broke through it, retested and rebought it. So we know there's buyers in that area. So that's where I'll get out. Obviously my average at the moment is here, but when this trade triggers, wherever this trade gets triggered somewhere up here, average is going to come up. So the profit will be that. And then obviously that is going to be 50%-ish retracement on the leg that we just put in. Euro US dollar, second short on. Third short up at the highs. So I'm just going to incorporate the neckline here of this. So we got this area here, then we gapped and we came back from that area. So there's definite price action happening in there. And obviously then we've got three peaks somewhere up there is going to be a sell. So it may be reacting off of this area here, which is, this is kind of a previous area we were selling at, look. So it may well just come down from there. Obviously, market gapped down. This is V-shaped. So this is kind of not real price action. So what we're actually doing, if you look at it, is we're in a downward channel. And this is Trump. So this makes sense for it to sell off from here. Target, just going to ungreedy myself down into there. Pound odd, longs. So getting out of this one today at some point. So that'll be the trade over. Unfortunate, didn't quite get that. That was unlucky. If I'd have got that on, obviously we'd be in a lot more profit now, but didn't manage to do it. So exit up there. Do I even want to let this go? Do I just want to take this off now? It's 0.7%. It's nearly 1% on the table. Do I give it the benefit of the doubt? Is there any reason we would be reacting? Yeah, there is. So this is hit that area here. We're half an hour into this candle and the buyers are stuck. They can't get through. There's an argument for taking this off now. We're also at ADR. Yeah, we've hit ADR for the day. There's an argument for just closing it, isn't there? Which I think I'll do. Take the money. Gone. So there we go. So banked pound odd, 0.72% in the bank. Did that not just say a different figure a minute ago? Have I got the wrong calculation on this? I'll check that later. So yeah, pound odd out. So I need a new long on this. So obviously the sell zone I don't need because I'm long only. So where do I want to get back in? So these highs here and this low here is what we hit. So the previous support, we broke, we tested, came down, we came back up, hit it again, hit it again, hit it again, hit it again, broke through it, used it as support. So this is the flip zone between the buyers and the sellers. So if we come back down and manage to get a retest on that, it's a 50% retracement and it's where they were previously buying from. So I'll try a buy out of there as a new entry. Pound CAD, 2 buys on. That one's in profit at the moment, but yeah, I'm going to give this the benefit of the doubt that we are going to get continued movement up there. Canadian dollar might weaken with the US if the US weakens this afternoon. The CAD I think is pretty weak anyway with what's going on with Trump's tariffs and things. They're under threat, although the tariffs haven't come into effect. The threat is there that they will have the tariffs, won't they? They've got to sort out the border. They've got to sort out everything that Trump said. Otherwise, they are going to get tariffs. So I can't see it being particularly strong. Also, the other downside for the Canadians is Trump is trying to control oil pricing and get oil pricing down so that the US oil is more attractive to the world market, which will pull down the price of Canadian oil exports. And 60% of Canadian oil exports or something goes into the US, who will be paying less for it. So it's not looking good for the CAD long term. But anyway, that can change on a dime at the moment. So happy with that. We've just had lovely news on the pound. We've got a weak CAD, so I'm going to leave that one on. Pound Swiss coming down, so I'm looking for an entry back at the origin of that move. This is a tricky one. I said about this one yesterday. I'm not really comfortable buying this here, although there's a good probability I think we might get a little bit of a bounce out of it. So I'm going to come down here, which is roughly 50% of the range-ish, and I'll try a little buy out of there. I'm not sure this is going to get down there. We've got a strong pound at the moment, so we'll see. Pound US, have sells on this one at the moment. Next entry is up at these highs. Somewhere around here, we're going to find some sellers if we can break those highs. So target to the downside, I'm looking at this area here. Could look at that. There's loads of places to the downside. If it pushes up and a new entry goes in, target will move up to here. But right now, I'm going to see if we can get a big move down. The only way this is going to work is if this US dollar strengthens, because we just had decent news on the pound. Everything's going well for the pound at the moment. So we need some negative US news to get up there, positive US news to get down there. So it's going to be quite a tricky one. This is why we're sort of sitting like this at the moment. We've got a strong currency against a strong currency, which means that nothing can get anywhere. So sitting around waiting for one of these to actually gain an advantage. New Zealand dollar CAD, longs on at the moment. Next long at the lows, out at those highs, but not going anywhere. It's coming down gradually, but can't do much with that at the moment. New Zealand dollar Swiss, I am about to trigger a long. So next 30 minutes. If this closes inside, obviously, it won't trigger, but right now that has tapped into the very top, so I will be getting into that long. I think it has anyway. we'll find out in half an hour. That will either trigger a trade or it won't. It has technically entered the box, but maybe it hasn't. I don't know. I can't see. It's that close. I can make a decision now. I can either drag that up a little bit and it will trade, or I can leave it where it is and take a 50-50 on it. I don't know. I don't care. It'll either work or it won't when the trade triggers. So I'm just going to leave it. That might be in later today. If so, second entry on that, I'll be looking down here somewhere, potentially, maybe those lows, but it's very tricky to pick a level on this because it's such a mess. So it's one of those where if it gets in here and half of an ADR's there, I'll kind of stick it somewhere around here because I just want to scale in. There's nothing obvious you can see that you think, right, I'm waiting to, don't want to wait until there because it's too far. So we'll see what happens. New Zealand dollar, US dollar, it's got a trigger first, isn't it? Shorts on that one, it's in profit, hasn't really gone anywhere. I'm looking for this previous low before the Trump V-shaped recovery, and I'm incorporating that wick because I don't know whether they're going to use it, but this is the previous low. We've got multiple lows before that at various levels, and it could react to any of them. We haven't got to any of them yet, so we'll see what happens. If I see an obvious bounce happening, I may well exit. This is one that I can trade in both directions very cheaply at the moment, so I will get in the other way. But I want to find a decent level, ideally, to make that decision. So hopefully we just carry on short today. We get some positive news on the US, which will help drive this down, and then I'll get out at some point. But right now I'm just going to leave it those lows. It's never going to get there today. It's going to have to move like 100 pips, which New Zealand dollar, US dollar is nearly 200 ADR. It's not. It's going to take some serious news to move it 200 ADR. US dollar CAD. This is just totally stuck at the moment. It's been stuck for ages. We're down at these lows still. It's yesterday it managed to get slightly lower low, and today it's just about got another slightly lower low, but you can see it's just really struggling to make any progress to the downside. So I'm holding it at the moment. I've got 2 on it. I've been in it for a while and I can't really do much with it because it's just not going anywhere. So I either want it down here for another entry, or I just want it to come up and try and get back into these highs and hold this previous balance that we were in. And all it's done since this Trump move is just going to a really contracted balanced area here, which it's just, you can't make a decision on it. It's just not doing anything. So going for those highs still. US dollar Swiss, looking for an entry long. So this break will be my entry long if we can get it. There we go. That's all your zones done. So banked a little bit today, which is good. I have to go and watch the stream. I can't remember what that was. When that was down there, I just want to check what the numbers were for profit, gain, and swap when it was down here, when I pressed the bank button. Because I thought that said 0.8 something, but maybe I was looking at this. I can't remember, but I'll check that later if I remember. Right, that's it. All done. So clean breaks to the, look at the FTSE. Show me the money. So that's the 30-minute range just gone in there. And that is what we're going to look at today, 30-minute ranges. So, yeah, that's nicely in profit at the moment. Cool. I really want to press the close button on that one. It's so close to target. I'm going to let it do its thing. Because this is where I'm looking at trailing stops, yeah. Things like this. Sitting in $2,000 of profit. Yeah. If this suddenly goes, fooled you, like that, we are going to take whatever the loss is going to be on this. For $800 loss. Yeah, we're sitting in just over $2,000 worth of profit with the potential for an $800 loss if it doesn't move that far. It does not make sense to throw this money away at all. This is why you need to babysit. There is no algorithm you can create that says make a decision. The decision for me is options are grab $2,000 now, or take the chance on grabbing 2,400 or an $800 loss. It's just not worth it, is it? This is why you need to trade manually. You've got to be watching stuff like this. I'm making an executive decision on both of those today because I want the money in there, and not because obviously this is testing an automated strategy, but it doesn't make sense. If this comes down and hits this, I've closed out 1940, and I could have closed out 2200 or 2300 or something. Let's see what the actual profit would have been if I'd let them run. So it's 900 and 722. So it's because we've got different lot sizes on. It's because we've got different lot sizes because it's using that martingale multiplier. But you know, that's just absolutely no reason not to take that, is there? Stupid. Morning, Lucas. So yeah, we'll go. There we go. Banked it. I've broken the test because I cheated, but I don't care. It's only a demo account, but even so, you want to make the right decisions. The same decisions I would have made if that was live. That's what I've made. Right. Let me open my other terminal. So we're going to do some ORB testing. Where's my data? V2. There we go. So what I want to test is the 30-minute opening range breaks. Okay. So the strategy for the ORB, the new version of ORB, what's it called? SAN 2025 ORB. The new version, basically, start off with the NASDAQ. What we are testing is basically the size of the range, and that's been determined to be minimum of 20% is the most effective. So with the SIH at the moment, I'm looking for a minimum of 10% of ADR. That was the optimal for the hedging variation of the strategy on all instruments. For the standard opening range break, using a small stop loss, which is kind of the Swiss Financial Institute version of the strategy, the best thing to use is a 20% opening range, indicative of high volume, right? So what I want to test is have I got the set file for haven't, so I need to change this. So it'd be 1630 35. No, sorry, 1635, 1640, 1645. So it would be 1730 is the, sorry, hang on, brain, 1700 is the 30-minute ORB, isn't it? Yeah. I'm just going to check these. Let me just open one up. My brain's not working. Yeah, 1700. So we're using a 2 and a 4 minimum range, a 1 and a 4 target, and a 1.2. So 2 and a 4. So I'm going to make those all zeros because I just want to test this 30-minute range. Instant trade, money targets, everything else is fine. Closing out at 2,300. Hang on a minute. $2,300. Closing out at 2,300 with 1.2. Good call on the DAX. So let me just, I should have got this set up before I came on, really. That's fine, that's fine. We'll use a 10. No, let's use a 1 because I don't want to blow the account. 1.2 multiplier. Just keep a nice small one. Fine. So that's the test. So this is going to test the 30-minute opening range. Just going to do a visual back test to start off with. Just so that I can see what it's doing. You see that? Regenerating data. Can we look at if there are any meaningful stat differences between longs and short trades win rate? Yep. We'd have to run an individual test though to do that. We'll do that in a minute. Run some tests first and then we'll run an individual test. Well, I'll just run this standard individual test basically to start off with. So God, just regenerating the history file. Haven't run it on the NASDAQ on this account by the looks of things. Oh no, I have done it. I've just updated all the data, that's why. Let me just see what the test conditions were. So we were running 9th of January 24 to 20th of the 12th. That's fine. 23, 50K, one lot, yeah. Come on. Morning, Lucas. If I didn't say good morning, can't remember if I did or not. So just doing a visual test to make sure it's doing what I want it to do. So that's the New York Open. So there's your open. 5, 10, 15, 20, 25, 30. 30-minute ORB, long break. ADR is 208. Stop loss is 208. 20-point stop. Target at 4R. 20, 40, 60, 80 roughly. That's good. Straight to target. So there you go. 30-minute ORB, straight in, one win. Nice. If only it did that every day. Exit 2,300. Cool. Okay, so that's all fine. I just run another one. Okay, so break short, stop out, break long. Whoa, don't know. But anyway, that's working. So I'll just run that standard test. Actually, it's pretty quick, isn't it? I'll just run it in visual mode. We're only using open prices at the moment, but there's a very little difference between the two. So yeah, so it's equity curve is up, 1.63 return on drawdown. It's good. Right, let me just save that out then. So NAS 30. We'll pop it into strategy quant and we'll have a look at the long short comparison on it. Nas 30 there. 50k. Is it a 50k account? Yep. Okay. So this is just the standard. So basically what I'm doing here is the settings that I have decided to use. I did say morning. Brain's getting old, you know. So there's what I've just done there is this is the set file that I've decided to run, which is basically 20% of ADR minimum range to take a trade using the 5, 10, the 15, whichever one hits first. Not removing the opposite pending order. So if we break long and it doesn't work out and it stops me out at 10% of ADR, we then drop. I will take the short trade. These were the optimal settings that I found. Not optimal, there's thousands of optimal settings, but these are the ones I decided to pick because they weren't the very top and they were sort of somewhere in the middle-ish. So there's much more chance of them repeating themselves in the future. They're in the middle of that bell curve. Closing out the trades at end of session. So for the DAX, that is at 4:30, and the FTSE, and for the US session, it's 11 o'clock at night, which is basically end of New York session. So that one's hit target. Look, so if I had left it on, we'd have made a tiny bit more money. But anyway, it hit. So that's good. So I haven't really skewed the results because we did hit target. This one, at the moment, we haven't hit target. So I have skewed the results, but hopefully that will come down. So that's basically the testing criteria. So all I've done is on these, I've decided to introduce the 30-minute ORB because I spotted a lot of days in the forward testing where we didn't get a trade on the 5, the 10 or the 15 because the range wasn't volatile enough. We didn't get 20% of the range done within 15 minutes, but then it moved. And within 30 minutes, we have actually formed a decent 20% range. So I saw it take some of these 30-minute ORBs and just go for the day into a trend. And I was like, we're missing all of this in this potential movement. So I decided to just go straight in and live test it. So this is the round of back testing basically on that strategy. So I'm not going to change the 20% to 40% criteria, the 1 to 4R return on drawdown, risk reward. I'm not going to change the stop loss levels. I'm not going to change anything about what we know works already on the 5, 10, 15. This is just, can we introduce the 30 if we haven't had a 5, 10 or 15 that's worked to try and recoup some of that loss? So one of two things happens. Either the 5-minute range is taken and stops out, and then it takes the 10-minute range if it's all happened within 5 minutes, and it stops out, and then it takes the 15 if it's all happened within 10 minutes and it gets stopped out. So the worst case scenario is if you get a very volatile open, there is the odd day, very rare, where you could take 3 trades because it's so whippy. The 5, 10 and 15 all get triggered and stopped out within one candle. In reality, you take the 5 like we did today, yeah, and the 10 and the 15 will never get triggered because you don't stop out on the 5. But if what happened to today was we took that 5-minute ORB and this candle went like that and stopped out, the 10-minute ORB would then be taken. Yeah, you would never take the 15. It's rare. It does every now and again happen. But so you're really only going to take one at the open, and it'll either be the 5, 10 or 15 depending on volume and volatility. If that has triggered and then stopped out, what the 30 does is give you a second bite of the cherry to try and recoup the losses made in the first. The danger is obviously you can make a second loss. So this is what I'm testing, is how often does this actually work? And is it worth incorporating it into the 5, 10, 15 break? And obviously, if we take this, it will be the same here. This level for the 5, the 10, the 15 will be the same for the 30 because one of those 5, 10, 15s is going to form the high of the session. So that one will always be in place. The one that we leave in place up here, if this one doesn't work, that's never going to change on the 30. So we're only actually really affecting a new entry in the direction of the break. That's really all that's ever going to happen. So I want to know if it's worth bothering with. So this is the test we've just run. We're using a standard 1 lot test. So there's no sort of risk parameters being adjusted depending on account balance. It's literally just going with one standard lot every time, but it is using a martingale multiplier of 1.2. So if we look at the list of trades, we're getting one lot 1.2, 1.4, 1.7, 1, 1.2, 1.4, 1.7, 2, 1. Yeah, so it's a small multiplier. 4.3. Let's look at what the highest lot size is we ever get up to. 4.32. So the worst case scenario, you're multiplying by 1, 2, 3, 4, 5, 6. So this tells me the longest losing run is 6 trades. Simples, which it should be backed up here. Max consecutive losses. 15. How can you have 16? How can you have 15? Ah, yeah, you can. Because what's happened is that lot multiplication only happens in the direction of the loss. So if you go that way and then you go that way, that is the same lot size as that one was. So you could do that in a day and it won't actually multiply the lots very much. So yeah, you can have more losses, but they wouldn't. If you were to do any kind of lot multiplication, where it deletes the pending order on the other side, if that stops out, and replaces it with a martingale, in that scenario you would get killed, which is why the EA doesn't do that. It doesn't use that logic. So you can have longer losing streaks, but those will be on choppy days, and those choppy days you will only take 1 or 2 losses. So in theory you could double or treble what you see here, and yeah, that's basically how the logic works. So right, so let's look at the long short comparison. Longs 50%, 50-50. Who'd have thunk it? So basically it makes that can't be coincidence, surely. 50-50, exactly. There is no advantage to going long or short. If we went long only, right, long only made 19.94, short only made 12.99. There's very little difference in it. Very little. So there you go. So there's no difference. But this is the thing, and this is the thing that I've always said about opening range breakout strategy. Everybody asked me, as soon as I launched the strategy, as soon as I launched the EA, they said, you've got no moving average filter. How can you filter for trend? You don't filter for trend in a breakout strategy. It's not a trend strategy. Trend strategies, you filter for trend. Breakout strategies, you filter for momentum and volatility. It's nothing to do with trend at all. So this backs that up. If you've got a trend going like that for the entire year, it will break short and it will go to ADR short, because the people that are buying are going to take profit. Those momentum short breakouts, you want to be on them. You don't want to ignore them. The ones that are going up are going to go up anyway. Fine. But don't ignore the shorts. Shorts are also going to work, because we are taking a small range and we are saying, if they decide to buy the crap out of it today, go with them. If they decide to sell the crap out of it today, go with them. What's happened yesterday, the day before, the month before that, it's got nothing to do with the price action at the open at 9:30 in New York. It is that or it is that. It's binary. So you take the break. If you just go long, you will make more money than if you just go short. Of course you will, because you're going to have more breaks long. So therefore, you're going to get more profit. But you're just going to reduce your overall profitability if you ignore that. So you're basically saying, I don't want 50% of the money I could have had. That's what it's saying. On this particular case, you could change the criteria to change this data. But the idea is we're trying to be impartial here and just saying, right, this is what I'm doing with the 5, 10, 15. What if I was to wait until the 30? What would happen? I would just make another X. I'd make another 1.6, another 6.78 return on drawdown ratio. That's it. So here today, for example, if we hadn't taken any trades here, that is our range, but that range is too big. So that's why it's in red, because the range is either too big or too small. It's obviously not too small because it's huge, but it's too big to take. And the reason for that is there's no way we're going to get a 4R return on a range that big. So this is over 40% of the average daily range that's been done here, for example. So it's 268. We've done 132. So within that first 30 minutes today, we've done over 50% roughly of our average daily range. So if you want to try and get a 4R return on this, what have you got to get? A 200%, sorry, no, a 250% ADR move. It's not going to happen, is it? So there's just no point in taking that and trying to go for a 4R. You could go for maybe a 1-to-1, but what's the point in getting a 1-to-1? It's not profitable, is it? If you get a 50% strike rate, you're just wasting your money. You're just wasting commission. So it's pointless doing it. That's going to hit target, hopefully. So that shouldn't have taken off, but I did. So yeah, anyway. So that's a good result. We'll rerun that test quickly. I was going to do a system parameter permutation test, but to be honest, if I'm going to use the inputs that I'm using for the initial 5, 10, 15 break, is it worth having a separate EA running on the instrument to say just take the 30? Because what you could do is you could set up, if you really wanted to do this in granular detail, you would run tests using only the 5-minute opening range breakout, and you would determine what is the optimal 5-minute range breakouts to take, or what is the range of optimal breaks. So somewhere between 10 to 15% is optimal for the 5, but on the 10 or the 15 it might be more or less. So you could set up the EA 4 times, once with optimal settings for the 5-minute, once for optimal settings for the 10, 15 and for the 30, and each of them would have different inputs. For me, that is a little bit curve fitting, and I don't think necessarily it's the right thing to do. I think when you're trying to take multiple breaks based on volume and volatility, we're trying to read what the market's doing at the open here and say, if it's really, really tight, we'll wait 10 minutes. If it's really, really tight, we'll wait 15 minutes. If it's about right at 15, we'll take a trade. But we're trying to gauge roughly what do we need the market to be doing at the open to make us money. If it hasn't made us money there, do we really want to change all the settings on the 30-minute and go, well, that didn't work today, so let's try a completely different set of strategies on a 30-minute break? For me, it's more, let's keep everything the same, keep it in the same EA, have the one EA run the entire thing, and average out the profit. So the 30-minute ORB, I don't really want to do a parameter permutation test, but if we did, in fact, it's probably not a bad thing to do, is it? If we run a parameter permutation test on this and we get the same thing come back saying don't delete the pending orders on the opposite side, and definitely do use a 20 to 40 range, and definitely use a 4R and a 10% of ADR stop. If it comes back and says all the same stuff, we know we're along the right lines, aren't we? Because this is just the way you need to be trading stock indices. So let's see how long a permutation test will take. This is only a year's testing as well, so uh, 1,728 tests. It's going to take 15 minutes. It's a bit too long. Let's just have a quick look at some of the results though as they come in, and just see if it confirms the results from previous. I'll let it run 100 odd results, and then I can see what it's coming back with. So 1.36 return on drawdown, not using martingale at all, no lot multiplication, it's fine. Stop at 0.2, so stop at 20% of ADR. TPs at 3 to 4 ADR, which is what we expected. Minimum range and maximum range 0.05, so 5%. So that's a lot lower, but it hasn't done all the testing yet. So again, I can't really do this because it's, there we go. Yeah, see now, increasing the minimum range is giving a better return on drawdown. And this is what I found is if you take the small ranges, the chances of the stop out are higher. If you take the bigger ranges, it's had more volume and more momentum and more confirmation of buying price action. So when you get a break of that, it's actually stronger. So the smaller ranges, although they are still profitable, you will get stopped out a lot more. So the strike rate is going to be a lot higher if you go with a bigger one. Now we're getting up to the minimum 0.2 ranges. The profit factor is rising. So again, this is the statistic that I found was the best. Using 20% of the range as a minimum gives you a better profit factor because you're taking less trades, but the trades have more momentum. Therefore, they work better, which is what the Swiss Financial Institute's study found. If you're taking breaks that are only above average ranges of previous sessions, you will get a higher strike rate, a lot higher. And this is my equivalent test of it because obviously we haven't got centralized volume to use. Martingale factors are coming into it obviously to make more money, but they're still making money without using it. Now we're up to 1.98 profit factors and our stop loss is reduced. So it's confirming everything that I said, reducing stop loss down to 10%. Yeah. Targets at 4 and 5R are working and minimum ranges of 20%. So yeah, it looks like the test is on the 30-minute is going to confirm it exactly the same as on the 5s and the 10s. So I'm just going to stop that. I might run that when I've got more time just to get a full data set out of that. But I think that's probably about right. So I'm just going to do this test again. I'm going to run it on the Dow. We'll just get the data out on the Dow. Oh, I've got to update my data again. Updated all my tick data yesterday. Haven't done any testing since, so it's just got to regenerate all the history files. Still didn't get to target on that one. There is a setting in here where you can set a daily target as well. So in that instance today where we hit 2 grand, yeah, I could say, get me out at 2 grand. And it will just shut them all at 2 grand. So there is that option for the, it's kind of the idiot factor. If you've got something that is gone there and you're 10 pips away from target and you're sitting on 2 grand, pay the mortgage with it. Don't go for 2,400. So you've got a quarter of next month's mortgage paid. Just pay the mortgage. Yeah, it's the idiot factor. It's like you're not in it for glory. You're in it to make money. Glory is hitting TP. Making money is taking money. And the other factor that comes into it is I've got a loss over the last 3 days of 25% to recoup. There goes 20% of that gone. So I'm 5% down this week now, or 7% down this week. So if we get a clean break this afternoon on the NAS, the Dow, or the S&P, which makes more than 7%, happy days. That's what it's all about. Long-term edge. It's not about having a winner every day. It's about having a long-term edge that generates alpha, generates profit. Okay, test done. Well, that's quick. 1.2 profit factor. So the Dow not as profitable. Now I know that because the Dow is not as profitable in all the other testing either. The profit factor return on drawdown on the Dow is actually a lot lower. So that is not a shock that the 30-minute is also lower. Why are you saving it there? Oh, it's an optimization report. Wrong one. Results. 30. Stick that in Quant. Okay, so profit factor, return on drawdown ratio 1.22. Not as good. Winning rate a lot lower, long and short. Longs 23, shorts 549. Right, so this is one where you are better going long only on this. So this needs to be out of sample tested. Is it better to go long only on the previous 3 years as well? if that is the case, then you know that the Dow is one of those that you do long break onlys on. Yeah. So this is the beauty of Quant Analyzer, is telling you all of this information. Yeah. This profit loss. Hang on. That's the wrong analysis, wasn't it? Long versus short P&L. Hang on. Let me just go back to the US. I was going to say 50-50 seems a little bit accurate on that NAS. Let me just go back to the NAS. Right. Okay. There we go. So yes, long P&L and the short P&L is different. Long versus short trades. That's interesting. So on the Nasdaq, there's more short trades than long trades. Yeah, the long trades didn't actually make that much more money, which kind of tells you it doesn't matter which way you go, does it? But with the Nasdaq, the Dow, short breaks are not, or in the last year, the 30-minute short breaks have not been as effective at all. So let me run on the S&P. But overall, your decision now is, like, if we take a Dow 30, your decision is, do I want this extra profit or not? It's going to reduce my overall strike rate, because the strike rate is lower on this than, it's not a lot lower actually on the Nasdaq. But you know, this is a trend breakout strategy. 30% is absolutely typical. You know, you don't get more than 30%, 40% really max on breakout and trend strategies, because that's just the way they are. The whole idea is we're making high reward when we get the trade on. It's not like mean reversion, where we get strike rates of 60, 70, 80% regularly, because we know what to do. With a breakout, you don't know what to do. With a trend, by the time you've identified it, it's quite often ready to end. This is why the strike rates are so low. But with mean reversion, if something pushes really hard, it can't sustain. Markets cannot sustain this. This is why we have average daily range. We know where extremes are likely to happen. What we don't know with mean reversion is how far the pullback will be. This is why mean reversion trading is so much easier, because you will get a pullback. It's the size of pullback which determines the profit, which is why you go for small targets, 1.2, 1.5 risk rewards, which gives you high strike rate. These, we're going for big wins. If we went with small wins on these, we would get higher strike rates, but you would actually make less money. It's all about adjusting figures and playing with permutation tests. This is what trading is all about, doing all these tests. So there's your S&P. Not fantastic, the S&P. Now, the S&P is traditionally a long-only instrument. SPX 30. So this one is kind of the one I would expect, if anything, to have a long bias. So 1.9 return on drawdown ratio, 30% strike rate. Lots of losing months in there, but the losing months are actually quite small. Very, very small, in fact. So it's more of a stagnation than anything. Longs, 97. Shorts, 316. Would you have thought that? So everybody says long only. You make more money on a 30-minute breakout if you short it. This is what testing is all about, isn't it? So in fact, you're better off not. So that's your long and short equity curve. That's your long equity curve. Look at that massive drawdown. Trying to long something when it's not wanting to go long at all. Trade 45. When was that? So March 2024 on the S&P. Right, it's gone off. March 2024. Where were we? And there was another one in July. Wasn't there another dip? Right, so this here and this here is this and this. Yeah. So bear market basically is where we are going to struggle if you were to go long only. But if you go long and short, yeah, in fact, if you go short only, all these little ones here, the pullbacks were more profitable and faster than the longs intraday. So, but here, when it wants to go short, it goes short, and it goes short fast, obviously, because it's a profit take move. So there you go. You know, this is the trouble with this sort of data testing. You can go so far into it that you basically go, well, I don't know what I want to do. If you don't know what you want to do, just do everything. You're still going to come out profitable. Try without lot multiplication. So large size trades don't distort. Yeah, you can do that. I mean, it's only using a 1. So, I mean, it's hardly using any multiplication at all. I've got it set up to 1.2, but my testing shows that 1 or 1.2 or 1.4 doesn't make a lot of difference. So you've got smoothed out losses there, and it's actually better without using multiplication. So SPX 30, I'll just call it one lot. So long 130, short 250. Yeah. So basically what it was doing was when you were getting multiplication, it was firing larger lots when it was happening to take the long trades, basically. So yeah. 1.5 return on drawdown, 3.9. The equity chart is still very stagnant though. This is this to me is a nice equity curve. You got stagnation. This is a parabolic move. Now, this is what I would call an outlier. You are going to get them outlier moves, but it's one of those things where if you remove the outlier move from the test and just look at that and that, it's still profitable. Whether you would get that again next year, no idea. You're not going to know, are you? Let's look at where that started. Trade 155. So we started on the 30th of July 2024. There. Right. So what happened was we had 3 massive volatile days. Yeah. So what happened there? And then we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 massively volatile days in the opposite direction. So think about those days and how big those candles are and how big these candles are. We've got an expansion in volatility. What's probably happened is every single day during that entire 2 to 3 week period, you just basically went clean break 4R, clean break 4R, clean break 4R every single day. And it put in a huge profit curve because you couldn't get it wrong. What you should have done on those days is used an 8R or a 10R target. So if you run a system parameter permutation test with a 10R target, you'll probably find it makes an even much bigger amount of profit and a much bigger return on drawdown. But it's all caused by one outlying month that may never happen again. So this is one of the beauties of Quant Analyzer is you can spot anomalies like this and go, well, actually, the vast majority of that profit was made up in a month. If you run a test over 4 years and you see that 50% of the profit comes out of 2 months, you've got to get rid of that because it's not going to happen again. It probably will. Something will happen again. But whether it will be one of those or whether it will be one of those, you're not going to know. There's a 50-50 shot that that could have been the opposite outlier. And not really, because actually we're using a positive R. But in a mean reversion strategy, you certainly could have it flip the other way because you would just go into a massive losing run because your targeting is different. Your stops are different, you know. So Don't know whether I would trust that result. Let me run the, I'd quickly run the NAS with a standard lot as well, without lot multiplication. NAS. So that one is 5.1 return on drawdown ratio. The previous version of the NAS using 1.2 multiplier, 6.78, double the profit. Much more profitable using lot multiplication. It never had a losing month. Without using lot multiplication, it did have a losing month. Yeah, but this is the thing. You've got to decide on one. You know, this is a very short test period as well. So I'm just doing it for speed over a year. But it doesn't matter which you use. Yeah, this is the point of system parameter permutation testing. If I can run 1,700 tests and more than 60-70% of them come out as profitable, whether it uses a martingale factor, whether it uses a 10, a 5% stop, whether the TP is 1, 10, 20, 30, 40, 50%, whether the range is half to a quarter to whatever. Yeah, if I test all of these, every combination of these that could possibly exist, and 70-odd% of the results come out as not losing money, it's a robust strategy. The one you pick is the one you go with. You have no idea of knowing if this will return, this exact set using this exact settings is going to return you a 4.91 return on drawdown ratio next year. Impossible to tell. It's never going to repeat what it did in backtesting because there's no 2 days ever the same. But you know that it doesn't matter whether how accurate you are. What it's telling us is the thing explodes at the open. So when it explodes, you let it explode and you go with the explosion. That's what we're saying. Sometimes you would have been better going long only. Sometimes you'd have been better going short only. Sometimes you'd have been better using no martingale, and other times better using martingale or using a lot multiplication. I hate the word martingale because it's not martingale. But, you know, so if you'd have used a 1.2 lot multiplier, you never had a losing month. Someone that sat there without using lot multiplication had losing months. But you both made a 5 times return on the drawdown that you had. So the maximum drawdown on the account was 369. So if you put $500 into an account, you'd have come out with 1,800. Yeah, if you put 50,000, you'd have come out with 180 grand. Yeah, but if you only got a 3 or a 2 or a 6 or a 7, you just got something different. Which variation you pick, and this is the difficulty I have always when I'm doing any kind of strategy development, is what do you pick? They all make a fortune, going down and down and down. This is all still making me money, still, all the way down to here. These ones didn't, but everything above this line makes money. Pick one. This is the trouble, isn't it? So and the same with the 30 now. I'm looking at the 30. We're going, right, okay, well, you look at the statistics here. There's nothing that doesn't make money. Basically, what we're saying is if you flip a coin and press a button and put a 3 or 4R multiplier on a 10% ADR stop loss on any index at any time, 5, 10, 15, or 30-minute break, if you do any of those at random, you will generate revenue for the year. That's what we're saying. The opening range breakout strategy is completely flawless. It cannot lose money. But there are better ways and worse ways of doing it. And what we're trying to do is find out which ones are the best. But the worst case scenario, you're just going to come out making money. However, you're going to have a horrible time at points where you're going to sit there for 6 months going, this thing's bloody useless. It doesn't work. And you're going to go, scrap it. I'm not bothering anymore. And then everyone else is going to be going, it's in the opening range breakout. It's printing money. And you'll be going, no, it didn't. No, you just didn't give it the chance to print money, because it's not going to print money every day. It's going to lose money regularly. I'm proving it live here. Yeah, we see this in here, right here. Yeah, this is like riding a roller coaster. But sometimes you get on the roller coaster and they give you a free ride. That's what we're waiting for. We don't know which day the free ride's coming. We just got to wait until it does, and it will. Because this also, the other thing you've got to understand about stock indexes, which is unique to stock indexes, is they have earnings cycles which affect this. So, earnings kicks off 4 times a year, where we have earnings fortnight, which is where you get huge volumes of volatility coming in and index changes. You get stock sector changes. You get individual companies, rallying sectors. Everything in here is affected by hundreds and thousands of different stocks. So at points, you'll find it very buoyant. And this is when you go back and look at Financial Juice. Every day they publish the Fear and Greed Index. This drives stock markets. This is why people are interested in Fear and Greed Index, because at times of fear, you'll have low volatility and no upward movement in stock markets. When you're greedy, when the market is in greed mode, it's confident in stock investment. Stock markets rally. Yeah. So this is bull and bear meter. At the moment, we're bearish. Yeah. But it doesn't mean the market can't go up. If you're bearish in the middle of earnings fortnight, and Nvidia gets above average earnings, it's going to go. Yeah, so it's all interlinked. But at the end of the day, you cannot use any information here to give you any directional bias at 9:30 in New York. That is when the bell goes, and the weight of imbalance between volume of buyers and sellers is going to drive it in a direction, as we've seen today with the DAX and the FTSE. Yeah, doesn't matter whether it's bullish or bearish. Doesn't matter whether the stats say to go long or short. If you shorted it today, you killed it. If your stats said you shouldn't short it, you missed it. But you'll get the longs and you'll still make money on those. So, there's no right or wrong in anything. And I keep saying it. I say it. It's like my little mantra now. There is no right or wrong in trading. There's different. There is no right or wrong set file to choose. There's a lot of different ones. But as long as the number here is higher than 1, you'll make money. Or rather, you won't be part of the 5% that loses 60% of their account in 60 days. Because you will not be doing something stupid like just pressing buttons at random because you fancy it. There's no strategy in that, is there? So I'll do some more testing on this. Need to test the other indices as well. So would be what, 10:30 for the DAX. I haven't got the FTSE on here, but I have got the DAX. Just run a quick test on the DAX and just see what we get out of the DAX ORBs. 30 minutes. So the upshot of this for me is, yeah, I'm going to take them. I'm going to include them in the cycle. The annoying thing of them is, with these, if you've got a 5, 10 or a 15 that actually is working, by the time you get to the 30, like today's a perfect example. So let's say this had have actually been a range that was tradable. It wouldn't have taken it today because it was already in a trade. So these 30s will only be taken if there's no trade on. So what we're saying is there an add-on profit that we can achieve? It shouldn't water down previous results. But obviously you can run the entire thing on a test using all of the breakout times rather than just individual ones, and that will give you that information anyway. So there you go. So DAX is not great on the 30, look. But it hasn't lost money, it's just not really made a lot. But it has good runs. Let me just stick a multiplier on this and just see what the difference is. Just a small one. The multiplier, all that's going to do really most of the time is just mitigate losses. It won't increase strike rate or anything like that, but it will just mitigate some of the drawdown. There we go. So it's a slightly smoother equity curve, making a lot more profit, 3 times the profit basically, but the strike rate isn't affected. It's still low, 24%. And this is what I kind of thought about the 30-minute ORB, because the 30-minute ORB typically is a bigger range. Actually achieving the target is harder. So, running a system parameter permutation test on this is probably not a bad idea, because what we're going for a 4R target here. It may be that a 2R target is actually more effective on the 30 because it's gone further. It's going to be harder to get the bigger target. So I'm just going to run a quick test with the with a 2R and just see if it increases results. Doesn't make any difference. It makes it worse actually. Go with a 0.3, so we're getting a 3R basically. No, so it's not as good. This is 4R is where you want to be with it, which is ADR. Basically, we're asking it to hit ADR. Generates a lot more profit. Because our strike rate isn't really going to change. Because we're only using a 10% ADR stop loss, it's a case of it's either going to hit it or it's not. If it doesn't hit it, just go for the home runs. That's the strategy. Which is the same with SIH, which is why I use the 5R on SIH. If we don't get that clean break on the stock index hedge and we get hedged, let it go. Let it get a real big stretch and then mean revert it. Don't try and get out at 3R and do, you can do manually, and sometimes it is a good thing to do. But the best thing to do in testing was to just let it go. Because if you're getting hedged at the open, it means there's no volume coming in at the open, which the longer that gets delayed, the more that time bomb explodes. The more build up you get, the more explosive the move. The more explosive the move, the further the move tends to go. So if we don't get a clean break and we get hedged at the open, it's because there's been accumulation. We wait for the explosion to happen and we mean revert the explosion. That's the advantage of SIH, and that's why that strategy works. So it all ties up. All this testing I've done on a normal OLB, an SIH OLB, a 5, 10, 15, 30 OLB, all this testing that I've done over the years on all of the variations of this all tells me the same thing. It's a flip of a coin on momentum based on bank and institutional imbalance, and let it go, because it's a trending instrument. Therefore, when it wants to trend, it really goes. So you go with the big ones and you just take lots of tiny losses all the time. And this is the frustrating thing about it. It will stop you out constantly. It's a pain in the arse. But anyway, there we go. So the 30-minute RB is worth taking as an addition. But it's not as good as the 5, 10, 15s, and I knew that, and I haven't bothered testing the 60s because I'm personally not really interested in taking the 60-minute breaks because it's too big a range. The market's done an hour's worth of volume. Saying that one works beautifully, doesn't it? Just take lot multiplication off. 4R. So yeah, it's got to be. It doesn't take many trades, look. $1.3. See, the hourly works as well. They all work. Need to do some more testing on that one. Right, so the 30-minute does contribute to the profit, but not as much as the 5, 10, 15. Yeah. Do all of them, yeah. I mean, this is the thing. Let's put them all in place. And just see what the because it basically what this is going to do by using every single one, it's going to guarantee you a trade every day. So with the 5, 10, 15, there are days where that initial 15 minutes worth of range does not equal 20% of the average daily range. Therefore, there are no trades. So I can't remember which day it was. Might have, I think it might have been that day. In the morning, we had no trades. And there's been quite a few mornings on the DAX where we've had no trades on the FTSE, and there's no trades on the DAX either, because the range is too tight. So there is nothing to do in the morning. But the 30-minute, you will quite often get one. And if the 30-minute range is still too tight as well, within an hour, you'll probably get one. If you don't get one within an hour, i.e. if an entire hour goes past and it still hasn't managed to do 20% of its average daily range, you don't want to be trading this, because it's just chopping. Yeah. And if within an hour they haven't moved it, they're not gonna, because within an hour and a half, you've put the higher or the lower the session in. At some point it will break, and you will find that it will break, but it will break in New York when the volume comes through for the sector purchases in New York. So that's when you get the movement. So it would make sense to use all of them potentially, but we'll run that and see what that does. Did I use a multiplier? I can't remember. No. So this is without multiplier. 1.3. So how many trades are we taking there? 219. Roughly the same amount of trades. Oh, hang on. That's only using the 11. Did I not just set that up? Did I not save it? I didn't save it, did I? I was going to say, that gave me the same result. That's weird. Okay. Right, again. Yeah, 524 trades, 1.2 profit factor. So much more jaggedy equity curve. I mean, you've got this section here, which obviously was, when did that start? Yeah, so that's that July dip in the indices. So that July dip in the indices, specifically on the DAX. Here. That's when it got killed. But it's a 3-day parabolic drop. So that day, I mean, I don't know what happened with the volume on that day, on those days, but it got killed. But it didn't recover during this. So you could use some kind of filter, because if you look at this price action here, look at all the normal price action on daily candlesticks, and then look at what happened here. A very, very, very different market there, completely different market. Yeah. ADR filter. But look at the ADR filter there. That one didn't move. So what was the results like in November? That's what you got July, and then that's what you got November on the same volatility. So you can't use an ADR volatility filter or any kind of volatility filter to factor out, because you would remove all of that loss, but you would remove all of that profit. And what these do is they cancel each other out. So there's no point in removing this loss, because the next volatility section, you're probably going to make it back. However, you could have the next volatility section doing the same thing, couldn't you? So unless it's proving to me that high times of volatility are not good for indices using the opening range breakout strategy, you leave those trades in. If every time there was a high volatility spike on ADR, it had a massive down dip, very simple. You apply an ADR filter and you remove that loss. Simple to do. Let's have a look at the S&P. Yeah, ADR will do it. Why are you not showing me? Why is it not showing me the data? Weird. I don't know what's going on with this. It's normally... Oh, there's the ADR down there. For some reason, it only goes up to August. But yes, I mean, you can see it's ticking up, but I mean, I've got that on the chart anyway, so. So, you know, you could say, if we look at an ADR level like that, it's going to cause problems. But there, we didn't move anywhere, and it made a fortune not moving anywhere, because all it was doing was breaking fast and hard up and down, which is exactly what we want. Momentum breakouts. Momentum breakouts haven't got anything to do with volatility, really, have they? They have, obviously. We need that volatility and that volume at the open, but you know, that these moves could have happened an hour after the open. We don't care. We've made our money by then. Or they all happened at the open and they were all really, really bad. I'd imagine that time during the SIH strategy was awful, because it would have got into some hedges, tried to recover them and not been able to, and it would have hemorrhaged a load of cash during those periods. Swings and roundabouts. Anyway, there we go. So a little inconclusive, but in a good way, that it doesn't matter what we do, we're going to make money. So the DAX, I didn't get the DAX 30. Oh yeah, we didn't test it, did we? So the DAX basically not as good. We know that because my initial data testing was, you know, is very, actually no, the DAX was good. Yeah, so adding the 30s and the 60s in doesn't improve this at all on the DAX. It needs a bit more testing, doesn't it, basically? But overall, if you do add the 30-minute opening range, it's not going to hurt at the end of the day. That's the important thing to take away, is it hasn't got a negative impact. And this is what I wanted to really find out, whether or not by getting into these 30s, there was going to be a negative, because I thought it would be, because I would have thought by the time we got to that 30 and those 60-minute ranges, it's exhausted because we've done the move. But that isn't the case. It does carry on after the 30s. So I'm going to leave those running on all of them. Now, this is an interesting one today. Look, the DAX didn't hit target. Yeah. And it's retracing. So there's a high probability that would have taken a loss of 400 if I hadn't have pressed the button myself to take this money today. But what it's going to do now is break long and possibly take a loss, or possibly make another 700 or 800 on top. And again, I've done all the testing on removing this after you make a profit and all that sort of stuff. Doesn't make any difference. It's all about getting the trades on. The chances of getting all the way back up there are quite small. It very rarely takes the opposite direction break if you do back tests with it. But anyway, I'll put this up in the. Somebody asked to have the EA, a testing version of the EA. I'll put it up in the members group so you can play around with it. I've got some further development I'm going to do on this because I kind of want to get to a conclusive point with the ORB strategy. I keep messing around with it. And it's getting to the point where I could reinvent the ORB strategy 100 times and come out with the same result, a profit. So I kind of want to just find a definitive one I can set up on an account and let it go. And I think this is the one because it's nice in the fact that it limits the number of trades a day, but also in a choppy thing like this, it's not going to get in and out all the time. It's nice in the fact that if you get hedged, with the hedge one, it works really well. But if you get hedged and you do a hedge recovery which fails, you can take a big loss. So there's all sorts of pluses and minuses to every variation of the ORB strategy. This one, however, is so super simple, and that's why I love it, because it's either take that, or that. If none of them work, don't bother. Try that. If that doesn't work, forget it for the day. Maximum trades you're going to take is 3 in one direction. On a very volatile day, most days you're going to take 1, maybe 2 trades. So your risk is limited. Your downside risk is very rarely going to be big. Your upside potential, however, when the market is volatile on every instrument, is huge. You're taking huge win days when the market wants to go. And the market will go when there's earnings. So, you know, it goes anytime you like. Trump, yeah? And this is the beauty of it. You get into a trade like this and you get a Trump, you're going to make a fortune. He's brilliant, isn't he? But at the same time, if he stops you out, you're going to lose 10% ADR risk. That's it. The downside is capped. So it's a nice variation. But I kind of want to do a real thorough full test and go, right, that's it. That's what I'm running with, and that's it, and leave it alone. Because I keep messing about with it. But then again, you know, this is trading, and the discretionary part of it also comes into play. Yeah, I just made $2,000 there because I made $2,000. The EA is potentially looking like it would lose half of that profit. So it's a tricky one, isn't it? I could program logic in to say if we get to within 20% of target, and looking at the last 5 candles, there has been no more than 1/2 green candles in them, take the profit because it's absolutely exhausted. There's all sorts of things you can put in there, but the more variables you add in, the more variations and parameter permutations tests you add in, the less reliable your forward testing results will ever be. So this is super simple. This is why I like it, because back tests will reflect forward tests for the vast majority of time with these ones. Morning, Plowman. You're very late. We're just about to finish. Anybody got any questions on anything that I've covered? I'm going to try today to get the new dashboard converted into MT5. Today's job. You can tell I'm really looking forward to that because I love MT5. So yeah, a day of pulling my hair out, bugs, and probably needing to drink wine. But yeah, that's my day. So I'll try and get that done today and try and get it launched. I've put the new website page up. I don't know if any of you... who was it that grasped, by the way? I don't know if anybody did. But I put the link out for the members to go and get the dashboard. So many people bought the dashboard that aren't members. I don't know, but there's loads of people that were in the main group who aren't members have the dashboard. And they're like, how did you get hold of that? I only told the members about this. So either I've got a mole, or what's more likely is when I uploaded it onto MQR5 Marketplace, and I didn't realize this, it notifies you that I've made a new product. So I think that's probably what it was. People that have, I think it's people that have bought something in the past have been notified about it rather than a leak. So I'm not saying anybody is. I don't really mind. I don't really care, to be honest. I bought it at full price. so I help offset the sales. Thank you, Mark. It's only $20 extra. I was just trying to do you guys a favor, but it kind of backfired on me a little bit. But if I start getting the products actually in my site rather than on the marketplace, I'm I can set up secret pages that I can give out. So I'm hoping to get that done at some point soon this year, but I haven't managed to yet. So, but yeah, the dash, I am going to develop the dash further. Especially, I just want that section that tells me what I've just closed out, because I think that would be really useful. And I'd like to set up more, do more with the heat map. So heat map opportunities. I'm kind of thinking of the idea of a button here, which you can press a little bit like the drawdown button. So when you press the drawdown button, it highlights everything that's going to improve your average price. I kind of like a button to press like that would highlight everything that is in profit, where you can either close out 25% or 50% and still bank at least 50% of the profit there. So what I'd like to be able to do is just press one button and go, if I shut that, show me other trades that I can shut that will still bank me half of the profit I have available. So I've got $83 available here. Show me everything I can bank under $41. Highlight it for me. And it will say you can close out that completely. You can close out that completely. You could close out that roughly completely. Or you could close out a quarter of that. You could close out a half of that. You could close, you can't do anything with that one, so that wouldn't highlight. Yeah, so just like a drawdown, instant drawdown control system. I've got to think of the correct logic for that and then build the correct logic for that. But that's the other main amendment I'd like to make to this, to add for position trading. I think it'd be phenomenal. And that, even that is phenomenal, isn't it? I need to do some drawdown control. Show me everything that's going to increase the average price on any position. Amazing. I love it. I've banked 178. I could shut that out right now and get the average price of Euro New Zealand really close back to the current price, giving me a quick, easy exit on the Euro New Zealand when it has its next spike. It's invaluable. I don't know why I didn't do this years ago. It's what I've been doing manually for years, but it's now a kid could do it. It's brilliant. I love it. Anyway, I'm super excited. This is probably the most excited I've ever been about something I've ever made. And it doesn't even take a trade. It's so good. Something that makes you money without taking trades. Can't get better than that, can you? Flip a coin, press buy or sell, wait for this thing to go green, and then press the X button. This is what makes the money. The X, the 50 and the 25. Not the analysis, entering the trades. It's shutting the stuff out when it's in profit. This is what this does. It shows you what's in profit. Can't get better than that, can you? Right, I'll leave it there. Anything you need, let me know. I'll be in Discord. Other than that, back tomorrow. We'll do the analysis tomorrow morning of how the week's gone. Be aware today we've got unemployment and PPI this afternoon for the US dollar. So we're going to have some US dollar volatility coming through this afternoon. Yeah, and we'll see where we go from there. Did anyone inspire you to do the new dashboard? I don't think so, no. It's something I've been wanting to do for ages, turn this into an EA. People have mentioned to me in the past, lots of times, lots of people have mentioned to me in the past that they wanted to be able to do stuff on it, but and I've wanted to do it for ages, but I just haven't had the, I don't know, been bothered to do it. I had a version of this that was half built and had been half built for ages. But it's one of those things, I have so many projects on the go at a time. And I tend to get sidetracked by stuff very easily. So I start to build something and then something will happen and I'll be like, and I'll flick over to that and then I'll do something on that. And then I'll flick over to something else. And I've got lots of half-finished stuff everywhere because there's only me. And I have to change my focus, and I always have done, change my focus onto what I think is the most important project. So when I see something, and this is the trouble I think with social media these days, is I'll be sitting there doing something, something will pop up on YouTube, and I'll watch it and I'll go, that's a good idea. I've not thought of that. I'll build something to test it. And I need to do it now. I need to test this now. So this gets dropped and I test this and I'll go down a rabbit hole with it for a week or two. And then I'll go, doesn't do anything much. I'm not really interested in it. What was I doing? and then I'll look at what I was doing, and there's lots of things I was doing, and I'll pick one of them up, and nothing gets done. But with this, I had it half finished, and I had a little bit of a breakthrough in logic because I was having a problem with it. And that's the other thing I get stuck with, me personally, is I'll do something for ages and I'll hit a brick wall and I go, screw it, I can't be asked. And I'll just drop it. And I had got to a sort of point with this, and then I suddenly had one of those things where I wake up at 4 o'clock in the morning and go, I wonder if that would work. And that morning I tried it, and it was the breakthrough I needed to get this done quick. And I made so much progress in 24 hours with it. I said to my wife, I put my head down in the morning and I was like, holy crap, it's 1:30. I have lunch at 12. And I've been so engrossed in it, the time just vanished. And I basically got it to about 80% completion within 24 hours. And I was like, I need to do this. I need to stop everything and just finish it. And I did. But now I've got a list of stuff I want to do to it. I'm going to switch over to ORB V2, and it won't get done for 6 months because it's fine as it is, and it does everything as it is to the point where it's brilliant, but it could be slightly more brilliant. But it's time. Yeah, this is the trouble. When it's only you, I have to also focus on making money, which is the other problem. So, you know, I've still got to be watching what's going on all of the accounts and, you know, everything else that I do. So, this is the problem, isn't it? If somebody could invent something where you could buy time, they would be the richest person on the planet, wouldn't they? Because that's the one thing you cannot buy. Did you just think we need this? Yeah, kind of. Just need to read through the manual correctly. There isn't one, Ploughman. I haven't got a manual. I haven't written one. Again, that's something on my list to do, which, you know what? People bought this yesterday, and I haven't had any questions from anybody about how to use it so far. So I'm kind of assuming everybody gets what it all does. But I don't know whether I need a manual for it, because there's not a lot to it, is there, really? But if you've got specific questions, then, or do you know what, it might be better for me just to do a video where I just basically sit here and go, okay, rather than writing a manual, this is what I'm going to do. I'm going to run through every input in here, and I'm going to show you what all these inputs do. Okay, and I'm going to run through it section by section. This is why I built this to do this way. This is why this does this. These are what these buttons do, and this is the reason I made these buttons do this. And that video will probably be around about 15-20 minutes, half an hour long. But would that be better? I don't know. I have questions. Okay. So yeah, I mean, that's the thing. I don't know. If you've got questions, let me know what the questions are. It might be better that rather than writing a full manual for it, because a full manual is going to take me ages. Yeah, because my manuals go through every input. Have you seen how many inputs this thing's got? How to adjust the spacing. I need to learn how to adjust the spacing. Yeah, so I mean, it's that daily section history spacing left. So this is your daily history section. Actually, I'll do this one because this is the easiest one to adjust. Yeah. So each of them has got that input for daily history spacing left, daily history spacing top, weekly history spacing left, weekly history spacing top. Yeah. So 380 is the pixel count basically from the top and the left. So this is 380 left and 20 from the top. So if I make this 300 I'll make it 800, yeah, it will jump over here. It's on top of current exposure. So if I hide the current exposure, here, current exposure section, Get rid of it. So there's my weekly history. So this is 800 pixels from the left. So when you adjust one, you need to adjust all. The way I had it previously was, I had it so that the trade, this bit was at the top, yeah, and then this column, the weekly column and the exposure column, were offset automatically by a distance from the bottom of this, which made what would happen is, if this grew too long and you had a short screen, you could never see this because you can't scroll, yeah. So what I decided to do was have every single one of the sections have an independent X and Y start point, i.e. top and left offset point. So if you wanted to, you could say, what I would like is, I would like my trade portfolio to be at the top. Yeah, so you would set your offset on your trade portfolio, instead of the spacing, top spacing, you would set that to 10, which moves this up to there. Yeah, and then I want my history one, just reset that a minute, my history one all to be 350. So if you set all of these instead of 20 to 350, and that one, it will switch them around. So this bit, the trade portfolio dashboard with all the symbols that are open at the moment, would go to the top and everything else jumps to the bottom. But because this is a variable height, you need to work out what each of these should be. So if I go 500 with the daily, now that's still overlapping that total a bit more, isn't it? So let's go with 550. There we go. So now that's down there. So now I know that that one's set to 550. The weekly also needs to be set to 550, and so does the exposure. And now what I've done is I've swapped the sections round. So I've now got this appearing at the top and these appearing at the bottom. But some people might want this here, and they've got a really wide screen monitor, and they'll put these three here. But this is why I've done it the way I've done it, so that I don't care how you want it, you can have it your way. If I set it up one way so that this is how it originally looked, and this offset was set in stone. So if you add 5 more trades, these all jump down automatically. And that was brilliant. It was dynamic. But what if you wanted this at the top? You can't. And what will happen is people will go, it'd be better if, it'd be better if. And this is what I get all the time. And I understand it, because everybody's different. Everybody wants different things. They say, it'd be lovely if it did it this way. Somebody messaged me yesterday and said, it's fantastic. I use a black background though. So can you change the input so that we can change the red or the green? I'm like, no, because red or green is profit and loss. It's the universal language for profit and loss in trading. Everything is done in red or green. Change your background color. But I get it. Some people might be colorblind and they need the red and the green changed to another color. It doesn't do that at the moment, so that will be something I'll probably implement. But I made it so that you can change the text color, you can change the button color, you can change the size of everything, you can change the width of everything, you can put everything everywhere you like. That way you can make it as yours as you want it to be. The problem with it is, to give you that functionality, you need a lot of controls. So if I didn't give you a lot of controls and said this is the way it works, half the people would love it and half the people would complain. You can never win. So, but I kind of assumed everybody would know what these are, but it may not be the case. But, you know, like I said yesterday, if you're in the live streams yesterday, we're men. We don't read manuals. What we do is go, I wonder what that does. Oh, it moves that down. Okay, brilliant. I don't want that moved down. Now I know what that does. So I'm going to assume that every one of those inputs in each of those sections does the same thing. That'll move that one down. This is how I think most men brain works. Man brain. I don't know. But that's what I kind of assumed everybody would do. But I just, you know, assume makes an arse of you and me, doesn't it? So it's not always the right thing, is it? To assume everybody is going to get it. You know, the column widths. If you put that, that's currently 70. If you make it 150, it's going to make that column wider. But if you make that column wider, obviously all the other columns are going to move along because you've made that wider. So you're going to need to move that along and that along, aren't you? It's highly configurable, but you've got to configure it. It's like when you first get a phone, it comes as standard. You then chuck a load of apps on it, you move this around, you change the color, you want to put a new background on it, you want the font bigger, you mess around and you got your phone right. That's it, brilliant. Save that, because every time you launch the dashboard, it does the same thing. So you don't have to set it up the same every way. But again, I'm assuming people know how to save set files, yeah? Save, blah, 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 blah. You've got to save your set file so that you can load your set file. I'm assuming everybody knows how to do that. But, you know, again, a lot of people are in different stages in their trading and software use and things. And some people may not know how to do all of this stuff. So, yeah, I think I'll do a video on it. It's probably the easiest thing rather than doing a manual. Because, but then a manual I can change, you know. I don't know. I'm just trying to be lazy and save myself a day's worth of writing, which is basically what it is to make a manual. Unless I get AI to try and do some of it for me, which was mentioned by Mumo yesterday. AI could write 60% of it. I've still got to write the other 40% and rewrite half the 60% it's written, haven't I? Visual is better, but then you've got people in foreign language who can't understand English, but they can translate text. Do you know what I mean? I will never win. No matter what I do, there's always people out there that will go, well, that's not the best way to do it. It's like trading, isn't it? I go long on something, everyone else goes, no, you should be going short. Like, well, that's good because I can't get my long order on if you don't go short. So please feel free. Anyway. So yeah, I will do that. I'll try and do that today. But my priority at the moment is trying to get the MT5 version done because people have already said, why are you not doing it for MT5? So I just haven't done it yet because it's a pain. So I will do that. Google Translate. Yeah, I mean, Google Translate should be able to translate me what I say, hopefully. I don't know. I've never tried that. But yeah, there's options, isn't there? There's always options. I don't know. I think I just need some people just need to be educated how to live. I think that's the problem. I can't help them. Doesn't matter how simple you make something or how complicated you make it. I think some people just are just not even going to get it. I had somebody the other day contacted me about a strategy, and I ended the conversation with, I hear McDonald's are hiring, because he asked my advice on something and I gave him my advice. Then he disagreed with my advice and I said, but you asked for my advice. He says, yes, but I don't agree with your advice. I said, well, why did you ask for my advice in the first place? We ended up getting into an argument. I said, listen, I don't think trading's for you, but I heard McDonald's are hiring, and I blocked him. I was like, you've just wasted 15, 20 minutes of my life, and I really am not going to be able to help you because your attitude is totally wrong to trading in the start. So good luck. And I don't think it's for you. And some people you just have to basically knock on the head and say, I'm really sorry, but this isn't right. And yeah. And a lot of those are the manual readers. Anyway, I will be back tomorrow before I dig myself into a hole. I'll be back tomorrow and we'll have an analysis. But obviously any questions you've got, just for the moment, just ask any questions in the Discord channel, you know, because it's going to help everybody asking questions. So ask away and I'll answer as I go, but I will get something done. All right, so have a good day. Anything you need, let me know. Other than that, I will see you guys tomorrow. Have a good one.